The US dollar is lower to start the new trading week, led by the dollar versus yen, which is down around minus 0.5% on the day. There was a BOJ policymaker, Gucci, who said that Japan is steadily progressing toward the 2% inflation target, which is making the potential case for policy adjustments stronger than before. That has sent the yen higher, the dollar versus yen to the downside. That's the biggest move today. But in this video, I'll take a look at not only that currency pair, but the euro versus US dollar and sterling versus US dollar from a technical perspective. See what the price action is telling you as a trader. So let's get started. Let's start by taking a look at the euro versus US dollar. If you take a look at the high price from last week to the low price that we saw on Thursday, we started to retrace some of those declines. And in trading here today, the price moved up to the 50% retracement level. That's this point right here at 1.17317. Also near that level is the falling 100-hour moving average, which is right near that 50% retracement level, and that's where we start the U.S. session with the price testing that level. Also within that area is a swing area that goes back in time. If you take a look at the high prices through here in August, high price. Actually, this level right here as well, and this level right through here. These high prices formed a ceiling, and it goes back in time as well. There's another high through here. In September, things got a little bit more wonky with the price moving above and below this level, but there are some instances where the price tried to find support near these levels through here, and especially in last week's trading, so we're coming back up toward that area right through here. So support here, breakthrough it, come back up to the level, testing it through here. If the price is able to get above the 100-hour moving average, 50% retracement, then get above the 117.419, the next target would be coming up here toward the 200-hour moving average, most likely. Alternatively, if sellers lean against this level, look for a rotation back to the downside in this pair as the corrective action of this move to the downside over the last couple of weeks or so starts to continue to play out. Just curious what the Fibonacci retracement would look like if we moved up this retracement level to the high price that we saw after the FOMC rate decision right there. And the 38.2% retracement would be another target on the top side if we break above the 117.419 level ahead of the 200-hour moving average. So be aware of that level on the upside. On the downside, other levels to watch would probably include this low right through here from this point right here. And then we'll look down toward our low price that came through here. These are lows in the month of September, which we broke through in trading last week. Each of those levels we saw increased momentum to the downside, but could not sustain that momentum to this low area down through here, which would be the next key target on the downside of further selling pressure. Let's take a look at the dollar versus yen next. As mentioned, this currency pair was the biggest mover in trading here today. And on the move to the downside from high prices that we saw on Friday's trade for the week, we saw the price move back below this swing area right through here, which had a swing high right here between 149.12 and 149. I think that was 17. The break below that level and then below the 100-hour moving average. Saw the traders looking toward the 200-day moving average at 148.42. We saw a rebound off of that level. We likely found support buyers here on Thursday's trade before moving to the upside. So two tests down there at the 200-day moving average. By the way, it held resistance through here and here. So the last four times the price has either found resistance or support at the level after breaking above it through here. So that increases this level's importance at 148.42. Be aware of that. On the top side, however, the sellers are leaning against the 100-hour moving average at 148.819. Also near that level is a 61.8% retracement of this move to the downside, which was broken in trading last week and now moving back up toward that level, finding willing sellers against that level. So battle going on between the 200-day moving average, 100-hour moving average, 61.8% retracement in the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. And if I look at the 4-hour chart for this currency pair, we bottomed toward the end of last week near the lows and highs through here. I'm going to put a horizontal line cutting across right through here, and horizontal arrow across there. You can see how resistance here broke above it here, came down to support there, and also found support trading last week and near that level before rotating back to the upside. This swing area up through here, which more recently was a support here, resistance here, support here before moving to the upside. Came down to that level I'm trading last week, earlier in the week. Then trade above and below through here, so staying below the trend line, the broken trend line right through here, and rotating to the downside. We're back near that area between 134.45 and 134.67. If we get above that level, we still have a lot of stuff above, including the 100-day moving average, the 200-bar moving average, 38.2% retracement, and 100-bar moving average on the 4-hour chart. That cluster of moving average is going to be a formidable resistance target on the top side on further momentum. If we continue move back down below the 50% retracement of this move to the upside with momentum, we could see further momentum back down toward our swing area down through here. So there you have it. Look at 3 of the major currency pairs to kickstart your trading day for this week. My name is Greg Michalowski. Good fortune as you're trading. Bye-bye now.